Hey everybody, it's Corey. Thanks for joining me. So I'm here on our property, taking a walk today. I brought you out here to show you these trees. I'll come back to these trees, so table them for just a minute. In this video, we're gonna talk about a couple things. At the end of the video, I'm gonna share with you, like I always do, the monthly stats for the housing market here. We're gonna look back at January, and you're gonna see that January was a very strong month for activity here in the market. So stand by for that. And then the main topic of this video is going to be the straw that I think could break the camel's back. You've got a housing market that has been burdened since the pandemic with load after load after load. So if that's your camel, what's the load that has been put on this camel's back? Well, the first is obviously higher prices. Since the pandemic, almost every housing market in the country has seen the property values increase. Some markets have seen 40% since then. Other markets, like here in North Idaho, have actually seen property values double since the pandemic. Now, that's one burden. What's another burden that's been placed on the housing market? It's higher interest rates. Since spring of 2022, when the Fed started raising interest rates, we've been in a higher interest rate climate, circa 6, 8, somewhere in there, and we've been in that environment for higher interest rates, and that's placed another burden on the housing market. And then a third burden on that camel's back is property taxes. As the prices of the homes go up, so does the tax that goes with it. So you've got all these things that are just sitting on that camel's back, and it's just waiting for one more straw to break it. And I argue the straw that could break the camel's back is insurance. And you guys, we're seeing it firsthand. Go back to October of 2024. Florida got double whacked by 2 hurricanes. One of those hurricanes hit North Carolina, Louisiana, Texas. All those states saw flooding and horrific hurricane damage. Then you have the West Coast here in January, record-breaking fires in the Los Angeles area. So you combine all these natural disasters and the insurance companies are getting their butts kicked. This cannot be solved by regulation. Government cannot make insurance companies provide insurance at a loss. They just can't do that. Insurance companies have to do what they do and make a profit. Otherwise, they cease to exist. So regulation is not going to fix this. And right now, we've got a housing market that is just burdened, waiting for one more thing to really break that back, and it might be insurance. I'm scared of what insurance could do to the markets in California, Florida, North Carolina, Texas, when those of you that want to sell your homes cannot get insurance for the buyer that's coming in. You can't sell your home to 75% of the market. You guys, 75% of all homes purchased are done so with a mortgage. And mortgage companies, banks are not going to fund a house unless it is insured, and insured with enough coverage to replace that home if it suffers from wildfires and hurricanes and such things. So we're really looking at something that's, I think, bigger than most are understanding. So going forward, how is this insurance thing going to affect those of you that are trying to sell homes, let's say in California or Florida or wherever you're coming from? How's it going to affect those of you that want to come to Idaho? Well, for those of you that want to come to Idaho, I'm going to share with you our personal story. Back in 2019, Bonnie and I here on our property. So just to kind of set the context, we live in these trees. We live in the wildland interface, and most people that live in North Idaho live in a wildland interface. So that means there's increased fire risk. Now, we're blessed here in Idaho that we only have 3, maybe 4 months of fire season, and then we manage our forests here, unlike places like California. And then California has 14 months of fire season. We had to scramble, find new insurance, and we're happy with the current insurance company that we're with, but we have seen rate increases. And I'm going to take you into the computer here in just a minute, sit down, pull up my policy statement, and show you how our insurance has been affected by the insurance companies and the issues that they're dealing with these natural disasters. So before we go inside, I want to share with you one story, just to kind of set the context. I got a call from a buddy who lives in California. He lives in Ventura County. He is in a wildland interface. He doesn't live directly in the trees or directly up against a mountain, but he's several blocks from where they've seen fires. So he calls me and says, hey, Corey, you know, I trust you. I want your opinion. The wife and I are thinking of selling our home and either relocating to Idaho or some other place. So we want your opinion on that. And then we want your opinion on whether we should rent our house or sell it. And here's the situation. We are hearing, since the wildfires here in California, he called me in the middle of January, right after all the fires were burning. He says, we're hearing in our neighborhood that rentals are getting 2 and 3 times their normal rent because all the people that lost their homes in the Los Angeles area are looking to rent while they either rebuild or figure things out and continue to work. And as a result, there's more renters for rentals, and rental prices are jacked up. So he wanted to know my opinion on whether he should hold that house and rent it out. And Bonnie and I generally will tell our friends, families, and clients, if you can hold on to real estate and make it positively cash flow and still move on with your plans to buy another house, keep that house. But we also tell people in California, we don't recommend that you hold on to your properties in California. We know it firsthand. We had several rental properties in California before we relocated here. And then we have investors and clients that are liquidating their properties from California to come to Idaho. And in none of those situations has it been favorable for people to hold on to their properties. Why? Well, California is heavily regulated. And if you're looking at a scale, California tips towards the tenants, not towards the landlords. So we saw this during the pandemic. You could not evict people from your house if they didn't pay their rent because of the regulations in California. That was not the case here in Idaho. We didn't have that high regulatory environment that California has, and it's only going to get worse. The other problem that you have in California is it's just a systemic problem with crime, homelessness, and economy that is going to, keep those property values very uncertain. So we argue if you can liquidate your asset in California and then arbitrage it in another state, whether it's here in Idaho or somewhere else where you can positively cash flow, you're better off in a place where your regulatory environment is better, crime is better, the economy is better, and so forth. So anyway, I told my buddy, I said, I would advise that you sell the house in California. And he says, I called a real estate agent to get a price on my house, to just kind of see what I could get. And she told me to call my insurance agent. She says, well, we're seeing a lot of homes here in California fall out of escrow because people can't afford or can't get property insurance on the homes they're in escrow for. So he says, So he calls his insurance agent, and the agent tells him, we will not reinsure your property. You live in a zip code that is in a wildland interface, and our company has deemed that we'll keep your policy and only your policy, and you can expect rate increases, but anybody else we would not insure as they buy that home. So he's struggling with, my gosh, if I do put this house on the market, it's a potential that whoever wants to buy this house may not be able to get insurance for it. It's pretty scary. So we're going to take you inside. I'm going to show you our policy and how we've seen our insurance rates go up. We'll get to the computer and we'll also look at those monthly stats for the month of January. Let's get in there. Okay, so we're back here at the computer. We're going to jump over to this website here. And this website is bankrate.com. It is an advertising platform, which means that the companies that you see on here are actually paying to be on the website. So when you see a recommendation for insurance or mortgage company, just keep in mind they're paying to be on that website. What we are going to use this for is the information outside of those recommended insurance companies. We're just going to look at their baseline information because it is good to compare state to state. And again, this is up to date as of February 2025. And like we said, we'll just read this here. The national average cost of homeowners insurance is $2,181 per year for $300,000 in dwelling coverage. But this will likely differ depending on which state you live in. Knowing both the national average and how the average rate of your state compares could be useful while shopping for home insurance, as you'll have a baseline estimate of what others in your state pay for the coverage. The map and table below show the average cost of homeowners insurance by state and percentage of income spent, giving a quick view of how your state compares to others. And that's what we're going to use this for, just compare states to others. The first state, Idaho, you can see here the yearly premium for $300,000 in coverage is $1,240. You come down here to Florida, the premium is quite larger. It's $5,376 for $300,000 in coverage. And then California is $1,381 for $300,000 in dwelling coverage. More on that later. Now, what I've done is I've listed the table here, and I've arranged the table for the highest annual premiums. So Nebraska is the most expensive annual premium in the United States. Their premium is $5,401, which is over $3,000 more than the national average. Florida comes in second as the highest premium per state. And we all know why. They've got hurricanes and flooding and stuff like that. But this is useful for you to see which of the states are the most expensive. Texas is up there. You don't see California in the top 10 or top 20 even. It's down here with Idaho. Idaho, not sure what rank this is, but it's definitely in the bottom of the table. Idaho's national or is below national average by $941 per year. And you will see that this is pretty consistent with what I'll show you when I show you my personal property tax premiums. Now let's talk about California for just a second. Let's jump over here. And we had talked in the beginning of the video how California is having problems in escrow, closing escrows because of property insurance. And that's definitely confirmed here. When we read this, it says, finding California home insurance can be difficult. A recent report from the California Association of Realtors found that in 2023, almost 7% of real estate transactions in the state fell out of escrow because potential homeowners couldn't find affordable insurance. Of that group, more than 61% claimed they couldn't find an insurer willing to write them a policy. And then we jump down the page, and you'll see a little paragraph here that says, if you're wondering why California's home insurance rates are so low considering how risky the state is, it's largely because of strict consumer protection laws. California state laws, Prop 103 in particular, prohibits insurance from raising rates more than 7% without approval from the state's Department of Insurance. As you can imagine, this clogs up the process and results in home insurance rates getting stuck at unsustainably low levels. And at the bottom of this page, it's a really good little article. I encourage you to look at it. It's a brief history of what's happened in the last couple of years in the California homeowners insurance market. But they do say here, and it's quite notable, they say, oops, let me do this. They say due to the increased frequency and devastation of wildfires in California, some insurance providers are limiting the number of new home policies they accept, while others are declining to write any new home coverage in the state. When carriers back out of the state, it likely has implications for all homeowners. So Bankrate's insurance editorial team is closely monitoring this rapid evolving situation. And as you go through this history, there's a couple notable things. It talks about when a lot of the insurance companies stopped writing policies or backed out of the state altogether. Some of the more significant ones you can see here, July 2023, Farmers announced that it will limit new home insurance policy in California. In May of 2023, State Farm stopped accepting new property and casualty applications for homeowners, condominium, and commercial properties. In November 2022, Allstate quietly paused writing new homeowners and condominium insurance policies in California. So California has a notable history and a degrading home insurance policy environment that is, as we stated in the beginning of this video, is going to cause some problems that I don't think a lot of people understand. So it'll be interesting to keep up with that. Now, let's jump over to our personal homeowner insurance policy and show you how we're dealing with that here in North Idaho. Okay, jumping over to Bonnie and my personal homeowner policy, just to give you an example of what's going on here in North Idaho. And remember, we do live in a wildland interface, and I told you that our insurance company in 2019 canceled us because of that fact. We went with Safeco, that's our homeowner insurance policy carrier, and we've been happy with them and have pretty much been in the $3,000 to $4,000 per year to insure our property. Now, our property is on acreage. We're basically overinsured because we not only insure our actual home and the land that it's on, but we also have several structures on the property. We've got a shop and a barn, and we want those insured. And then we have insurance coverage on our personal belongings, and then we included a rider to give us cost of living expenses for amount of time if we are without a home. And then we have liability insurance as well. So the coverage that you see down here for our annual premium, we are more insured than most. If we were just to insure our dwelling alone, I'm sure this would be much lower than it is. But to show you what's happened with our rates, I wanted to just bring this to your attention. So this policy statement I've redacted. Anything in the orange, there's information under here I just don't want you to see for privacy reasons. It's been redacted. But what I do want you to see is that this policy period here was from July 22nd, 2023 through the full year up until July 22nd of 2024. And you can see we paid $3,821 for our property insurance. Then went up the following year. It went up 32.5%. You can see here, July 2024 through July 2025, our rate went up to $5,663. So obviously in some places like California, the insurance company would not be able to raise the rate this high because they can only go up 7% a year unless they get buyout from the insurance commissioner. And that's why a lot of your insurance companies have bailed on California, because they can't keep up with the cost. Okay, so hopefully that helps you guys. Again, that's just an overview of what the home insurance market is doing, not just nationally, but here in North Idaho, and I hope you find that information useful. If there's anything to learn here, I think we need to know that as sellers and buyers, it's important to know what insurance is going to do for each of that property. So for example, if you're a seller, like my buddy did, you might want to call that insurance company and find out if your house is insurable for the people that want to buy it. And if you're a buyer, and this is what we're telling our buyers, if you find a home that you want to engage in here and we get it under contract, during the inspection period, it is critical that you contact your particular insurance company to find out what the cost of insuring that property is going to be. And obviously, if you're going to have a mortgage, the mortgage company is going to want you to do that as well. But what we're not finding is that insurance companies are not writing policies here in Idaho. What we are finding is that insurance is more expensive than most people consider, and we're actually seeing some escrows fall out because the buyer, once they found out what it was going to cost them to insure that property, was more than they ever anticipated, and actually may have even pushed them outside of what their monthly allotment is for their pre-approval. So it's critical that you know what the homeowner's insurance market is doing, especially if you're active in buying or selling, and we can be a resource for you in that here at the Martinelli Realty team. Feel free to give us a call and we can discuss your particular situation. Before we close the video out, as promised, we're going to look at the housing stats for the month of January 2025.